We are going live with Mark. 5, 4, 3, 2.
Good morning, everybody. Good afternoon to my friends across the pond. Welcome to the State of the Market Show. I am Mark Sebastian. I am your only option. If you are watching me on YouTube or on X, please like and subscribe and give us a heart, or better yet, come to Option Pit and register for a free account and join me live here every day, and we can chat about markets and interact and have ourselves a great time. Kicking off the show, we have a slow news week, or news day economically. We're going to lay the groundwork on the markets. We're going to be talking about Google and their huge raise and investment from Berkshire Hathaway. We're going to talk about Anthropic and their filing for that IPO. Nvidia getting into the CPU space, and much more. Should be a really interesting day. There's a lot of moving parts in this market right now. And before I get into our main stories, I want to kind of talk about two things. One, if you notice, we've got more confusion today. We have more confusion today. SPX is, down a touch. We're down about $4. The NDX is up. The Dow is down. Kind of across the board. Things are, pretty mixed. When I look at my individual ETFs, we got strength in housing, in materials, in energy, industrials, technology. Should be no shock there. XLK has been a beast. Utilities and retail, we got weakness in communication services, biotechs, financials, consumer staples, healthcare, consumer discretionary. So pretty mixed bag here, kind of a 50-50 day. Two reasons for that. One main reason is confusion out of what is going on with Iran. Our communications stopped. Our communications started. What in the world is actually happening? And that's kind of throwing things off. And then you have all this excitement around AI and technology, and we're going to be hitting on these, that continues to lead the stock market higher. And, that is one piece that, I think is throwing markets for, a bit of a twist. VIX bottomed out on Friday at almost breaking 15. It's kind of hanging out around 16 dollars down. As a whole, kind of a mixed bag. If you want to get kind of a feel for the whole market, you can look at RSP. That's S&P equal weight. It's essentially flat on the day. Not a lot happening there. So all in all, kind of a wait and see day as we head into the heavy economic data that is coming up later in the week. Wednesday, we get ADP. We have Broadcom earnings. And then on Friday, we have non-farm payrolls. Those are to keep things interesting. The other piece that's hitting us this week is the pattern day trading rule comes off on June 4th. We're going to be doing a cacophony of events around this. The 4th, I believe, Tasty Trade and Robinhood and a couple will be ready. And on the 8th, which I know many of you are involved in Thinkorswim or use Schwab, that is when they announce they'll be ready to trade pattern for the new adjusted pattern day trading rules. Now, it'll be broker by broker, but essentially $2,000 is what you're going to need in an account as long as you don't go over that margin. And there's more. It's not as simple and easy as maybe it sounds, especially if you use stock. If you use options for your day trading, you are going to have an extremely difficult time using more margin than and getting yourself into day trade jail. It's yet another reason why I think you're going to see option volumes continue to explode. We'll talk about this more in detail, on Thursday. It's kind of going to be the subject of the show Thursday morning is, day trading using these new rules. So that'll be really fun. Make sure you're here with me live on Thursday, and you're going to want to be in our option pit chat so that you can ask me questions about it as I'm going through the material. All right, now let's get into our different stories, and we're going to start with Google. Now, Google just announced an $80 billion raise. That $80 billion raise in shares is to fund its AI build-out. Warren Buffett's Berkshire Hathaway. I know he's not the head honcho anymore, but they put in $10 billion into this. This is really kind of their first major jump into the tech space in some time. So what they want is they want to be able to put that capacity, that extra dollars into more data centers, being able to dig into their Gemini code, some of the things that they're a little bit behind. This is such a massive bailout, such a massive build out. It kind of shocks me. And so this is, Google basically putting their foot on the gas pedal. Now, Google has had a nice run, and you'll notice that, word probably leaked of this maybe a little earlier, because we've seen Google stock drop from a close of 390 on the 28th, and on its lows this morning, it was down to 358. It's still trading around 367. So it's off, call it $23 in 3 days. That's not crazy, but that's maybe letting us know that, hey, there's going to be some, there's been a little bit of selling. So this is going to, and for Berkshire, they are slow to invest. This one has seen some nice a nice sell-off in the last few days. These are the A shares. They've fallen from a close of 724,000. We'll call it 728,000 on May 22nd to threatening 700,000 today. So that's a pretty nice drop here. Most of us are looking at the Class B shares because they're only $500, and they've had a similar drop. They've dropped from $486 down to about $470. So a nice $17 drop. We'll call it 3.5%. And that is, that is definitely kind of worth noting. Next up on our list is Anthropic. Now, Anthropic has filed their IPO, and this is going to get a lot of excitement. And I want to talk about how Anthropic and SpaceX are kind of interrelated. And I'm going to bring Andrew on here in a second to dig in more to this. But, we have the SpaceX IPO coming up next week. It's on the 12th. And leading into this run-up, I want you to look at the performance of these space companies. since the IPO date is announced, a name like Lunar. Now, some of this you can see we've had a really nice run, but like Lunar has gone from 26 to peaking out at a close of $45. ASTS, even stronger. Rocket Lab, all of these have gone straight up. You are going to see, and now they're starting to come back off. And, you know, one thing you've seen out of the market is people are trying to invest in companies that own shares in SpaceX, be it the individual names or these ETFs that have exposure to SpaceX. And we're going to, again, talk about SpaceX more over the next couple of days. But you're going to see names that have Anthropic exposure and or names in that space, suppliers, things like that. They're going to start going gangbusters as we head into that IPO. Then about a week and a half in advance, you're going to start seeing money, them start to lose some momentum, flatten up. People take money out of, like, why am I buying Rocket Lab, AST Space Mobile, Lunar Machines, you name the space company, when I could own the space company, that's SpaceX. So the excitement gets built into these names, but then gets rolled into, that money comes out and rolled into SpaceX. And again, we're going to talk about SpaceX in a lot more detail. But I would expect Anthropic to have a similar path. We're going to be talking about ways to get into Anthropic in the coming days. But just be advised that this pattern is coming. The last time we saw something that was this exciting for an IPO was probably Meta. And let me tell you about the crap companies that people were buying ahead of the Facebook IPO. I don't believe Zynga is a public company anymore. It is not. But let me tell you about Zynga. They are the maker of Words with Friends. And at the time, it was the biggest app attached to Facebook. The stock went cuckoo bananas. And then guess what happened? As 2 days before the Facebook IPO, everyone sold it. Stock was absolute hot garbage to own forever. And that money went into Meta. And the Meta IPO was kind of a disaster. You know, again, we're going to talk about SpaceX IPO, but, you know, this may be a little bit disappointing. This may be a little bit disappointing. All right. Now, my last story is around Nvidia and them getting into CPUs. You know, we saw Nvidia rally on that. Nice little pop. We've seen weakness in Intel and weakness in AMD on that news. I'm not sure it's the threat that the market is really looking for. And you know, in a world of endless demands, I know Nvidia wants to swallow the whole room, but I just don't think I don't know that should be their focus, and I worry that them starting to spread out into other chips shows that they're worried about some of the into what is a lower margin chip. You know, what does that tell you about where they view markets and where they view chips? They're trying to diversify. maybe they're starting to see some of the writing on the wall here in terms of the endless GPU demand starting to fade a little bit. Right now, it doesn't look like it. But one of these quarters, Nvidia is going to come in and not raise guidance, or raise guidance, and it's going to be like a really disappointing raise, and the market's going to hate it, and the stock's going to get slammed. I don't know when that is, but it is coming. All right, to talk more on markets and what we're seeing, and I'd love to get his opinion on a couple of these stories. Is our own director of education and head of option trading. He is our own Andrew T. Giovinazzi. Good morning, Andrew.
Good morning, Mr. Mark. I feel like I haven't seen you in like a week or 2 weeks.
Yeah, well, you were out of town for a week. That would make sense.
Oh, would that be the reason?
That would be the reason. So Andrew, kind of a mixed bag today, but a lot of I wouldn't say it's news that is big deal now, but isn't really going to be a big deal for a while. What did you think? I want to start with this Berkshire Google story. Berkshire making Google its third largest holdings. That to me is like their first changing of the guard type investment. Obviously, it's still Google fundamentally is, pretty darn rock solid, right?
Well, is this going to be like one of their warrant deals? That's my big question here. Like,
they've been buying the stock. They are going to own it.
Right, but I wanted to see, because in the past they've done warrants for equity before, and that's that keeps them from.
No, it's a $10 billion direct purchase of equity.
So they're going to swap direct equity for
cash,
shares, but where's the other $70 billion coming from?
That's not all Berkshire. They're going to be doing some stocks. They're going to be doing stock sales. They're going to be doing $70 billion on a $4.5 trillion company. I think they're just going to go straight in the equity markets and sell it.
Huh.
Yeah.
Because it's kind of an odd. It's not a very Warren Buffett type investment. Like, I don't feel where the edge is there for them.
They are,
unless they just want. They don't normally buy more at the top, but.
Well, they clearly don't think it's the top.
I know, but when was the last time you remember Berkshire buying any stock at the top?
Yeah, Berkshire has been building a position in Alphabet since the third quarter of last year. Prior to the announcement, the investment company's stake in the search giant was worth $20 billion just a bit ago, and then this is a direct investment. My guess is they're getting the stock at a discount through the offering. Right. I haven't seen the offering price yet, but that's where their edge is. I think the offering was set below market.
All right. Yeah, it's just. I mean, it's probably like, okay, we want to get on this AI train somehow, and we're going to get on it through one of the bigger players. I guess that would be the only thing. And they're also getting out of they've got rid of a lot of their Apple.
Yeah.
So
they still own a huge chunk.
That they've trimmed their Apple and raised a lot of cash, but they haven't gotten rid of all of it. And I believe it's still their biggest holding.
It is. And my understanding is the reason why they sell is just to keep its percentage of their holdings at a specific level and not allow the position to get too large. This is something called rebalancing, folks. Folks at home, rebalancing. When a stock position of mine has gone way, way up and it becomes a overwhelming majority of my position, I sell some and buy other things so that I'm not so heavily concentrated in that specific stock. That's called a rebalance. And I believe that is what Berkshire has been doing in selling some of their Apple stake, because if they had not sold their Apple stake, I believe at this point it would be like 20% of their position.
I have the same. It's a good problem, but Dell, I sold 100 shares before the earnings, thinking like 350. I was buying in what $75-$80 range in April.
Mhm.
It's 330, and then I blink. It was like a joke yesterday. I was just joking around with Longo on Option Insider Radio. It's like every time I looked, something was up another $100. It was like Qualcomm was up, or Oracle was up, or Hewlett Packard Enterprises is up.
Yeah, I mean, the amount of money in these spaces. Yeah, HPE on their earnings went from 47. It's currently $58. You and I were talking about it.
Of the year.
It's a crash up market right now.
So
me and Hans and Leisha and Tim were talking about it at a trader meeting this morning.
And that was one of the points. So the short answer is I'm trimming a lot of these stocks. I don't know if it's right or wrong or not, but it's whatever.
Well, and I put out a note this morning. Part of the reason why we're seeing, and I want to talk about this in more detail tomorrow, but my friend Noel at Convex Strategy sent me something yesterday about put skew, which is how expensive puts are, an out of the money put relative to an out of the money call. It is in like the zeroth percentile for how flat it is, and it's a combination of traders are selling puts to buy calls, traders are not buying puts, and traders are selling stock and buying calls. So what we're seeing is call option implied volatilities. That's how expensive calls are in names like Google are remaining high because traders like Andrew, what they do is, let's say they own a ton of Dell. They see how much it is of their portfolio. Well, they want to sell some, but they also want to protect they don't want to feel guilty if the stock keeps going higher. So, Andrew, I'm actually going to let you answer this. If I want the stock to go, if I have a huge gain in a stock and I want to take some money, but I also don't want to have FOMO if the stock goes up, what do I do?
Yeah, you just replace the stock with a call, like a long-term call.
Exactly. So we're seeing a lot of this. Traders are selling stock and buying calls. And what they're not doing is buying puts. Downside exposure, like I said, is in that 0th percentile. It's about as cheap as it gets. Yep. So if some news were to hit, the lack of preparedness and preparation and overall complacency in this market, and I'm not saying that's going to hit, but if that were to hit, the downside move would get exacerbated because you would be seeing traders rushing to buy puts, which can force the market lower. Yep. So that's just something to have on your radar, and it's worth having, protecting your backside a little bit, your hindquarters, as Vaz might say. And so, that's been a really big story. And the other story, Andrew, is the VIX and the VIX curve. This is not something I've talked about yet, but while you were gone, because now that you've been out a week, while you're gone, what was my biggest complaint about the relationship of the VIX and the huge stock market rally that we had, folks? Do not answer this, Andrew. I'm asking everybody else. What was my biggest complaint? Just think about it. Yeah, we had a really nice rally in the S&P, but what had VIX done? It would not sell off.
Right.
VIX was remaining really firm, hanging out in the 18s. And then Andrew says to me, Mark, I'm going on summer vacation. And I said, great, Andrew. And then over that period of time, we watched VIX go from 18 down to 50, down into the low 15s, and the VIX futures curve fully normalized, where now you've got, maybe June's a little bit expensive and July is definitely expensive, but the VIX curve has now somewhat normalized, which says that even VIX has kind of given up on that extra hedging.
Yeah, I believe the July 18 puts are like $1 or less than $1.
Yeah. So, Andrew, what's kind of your reaction to what happened while you were out and about?
I think the market is finally, this is a thing, like acceptance that there will be some kind of a deal. The strait will open at some point. The only thing that gives me pause, and I'm going to put this out to my weekly profit cycles people, is because I'm doing an open house on Wednesday about this.
Yes, you are.
This topic. The only thing I'll just keep in the back of my head is remember Brexit, right? We had that. Yeah. Remember, Mark, we traded that way, I don't even know how many years ago. And we got out of a lot of positions on the day before because they crashed the vol before the Brexit vote.
Yep.
We'll get out of, they were paying us. There was no sense in holding the positions through the vote. I'm not going to say this is going to happen last time, but you got a lot of the same sort of, like you just said, a little complacency sort of built in there. So, today I'm probably going to roll all my VIX puts down. I'm going to take profits, roll them down, take some money off the table. There's still huge contango, plenty of money to be made if this continues. But for the most part, I got to fix my camera, I think, a little bit. Stay
good,
on.
You're good.
But basically, yeah, that's we're waiting for news to come out. The market is preloaded. Volatility came in big because they're sort of accepting the fact that we're rallying now. And we also made that rally to 7,500, right? The 7,000 to 7,500, you took out that 5-8% move up already. So you don't need the big upside rally anymore. And now we just have the regular downside curve for skew. So take some of that out.
I think the strong rally in markets when there is an actual peace deal is going to be the bond market, not the stock market itself. And you could see the stock market be pretty boring. And SpaceX could, we're going to talk about this more over the next couple of days, but SpaceX could be a little bit of a market vampire. You add in some reallocation away from that 70-30. Right now, I feel like a lot of advisors are 70-30, 65-35. If they pivot back to 60-40 because we see the bond market starting to rally, you could absolutely see a little bit of pause in this market, if not a little weakness, especially if that happened around the same time as SpaceX. Andrew is hosting an open house. Make sure you guys check that out. Check your emails. I am going to be right back here in 28 minutes with Hannah and Leisha. So do not close this window when we're done here with the state of the market, because we're going to be right back live with you guys. We're going to be talking more about what's happened over the last couple of days with 0 DTE, 1 DTE trading. It's going to be a educational and informative, and as always, lots of fun because I'm going to be there with us. So make sure, don't close this window out. Stick with us, and we're going to be back in 28 minutes to spend some time with you talking about, pattern day trader, 0, 1 DTE, just a lot. So make sure to stick around. It'll be right after this. And check your email boxes for that weekly profit cycles trial as well. You're going to have to be on, you're going to want to be on Andrew's newsletter list in order to get access to that. So make sure you're registered for his newsletter and his VIP list. All right. Andrew, thanks for your insights this morning. Good to have you back. You were missed. So for Andrew Giovinazzi, our Director of Education and Head of Option Trading, I am Mark Sebastian. I am your only option. Thank you for joining us. And as always, thank you, Amin. I'll see you guys tomorrow at 10 a.m.